We are turning to the best on Wall Street, asking some of the top portfolio managers for their takes on the market and where you should be putting your money right now. Our next guest posting some sweet returns in this very sour market. His large blend fund up more than 32% over the past 3 years. Ken Heebner is the portfolio manager of the CGM Focus Fund. Ken, great to have you back with us.
Good to be here.
Let's take a broader look at the market right now. Are we in the midst of a bottoming process?
I think that the sentiment is so negative right now. I don't usually have a feeling for the market, but I'm positive. We have an index of sentiment, which when it's only been under 50 a few times in the last 30 years that we follow. It was under 50 in the bear market of 74, and when in 81 when interest rates were 20%, the unemployment rate was 10%, and right before the Iraq War, and it's down under 50 now. People are worried about problems in the world. I think that the U.S. economy has seen its low point. The housing will continue to get weaker in a few of the states, but you're going to see the economy look better a year from now than it is today, and the market looks a year ahead. Globally, we still have growth. The emerging countries continue to move forward. If there is a problem, or there is going to be a problem with inflation down the road, but right now people are worried about the banking crisis, and I think we found solutions to the problems. So, cash position high. Short positions are approaching record levels, and I think when we get the new short position, it'll be much higher than it's been. People are bearish, and I don't think the problems are as bad as they think.
All right, so let's get to some names, Ken. The Pabst Blue Ribbon, as I always like to say. You've liked this for a while. You have been right. You've made a whole lot of money. Are you still betting on Petrobras, the Brazilian energy company?
Petrobras continues to surprise on the upside with the oil discoveries, even though it doesn't delineate the size of these discoveries. I continue to believe that this company, with 14 billion barrels of reserves, 5 years from now we'll be looking at reserves of 100 billion. There is some controversy in the last day or two where politicians in Brazil are questioning whether companies working in this pre-sold area with these huge reserves should be entitled to make money under existing contracts. But the president of Brazil, Lula da Silva, who came from a labor background with leftist leanings, has proven to be a centrist as he's governed the country. And I think that'll be an important factor in seeing Petrobras realize the profit potential from developing the reserves. I don't think the government may do something, but I don't think they're going to deny themselves the opportunity to have the world's biggest stock.
And Ken, it amazes me that you've been up so much over the past few years. You're up this year, and you're not doing it by churning and buying in and out of stocks. I mean, you've made your bets and you've stuck to them, which I think would impress a lot of people, because another name that you've also been very consistent with, and that being Schlumberger.
Right. Schlumberger, the world's leader in the development and exploration for gas and oil. And when there's a shortage of gas and oil, this company is doing extremely well, and their earnings growth is going to accelerate starting in the second half of this year, because natural gas prices have risen, and the oil service business in North America, which had been in a lull, is going to accelerate. So you're going to see an acceleration in their growth rate. And the stock is actually 17 times next year's earnings, which is very inexpensive.
Ken, you like these two names, surely, but you know, in the Wall Street Journal today, there is an article about momentum investing, particularly in the commodities arena. Are you afraid that, even though you favor these names, that some of the froth may be coming off in this area?
Every time we've had a number of pullbacks. Clearly, when there's a market decline, people sell the stocks that are up the most. And all the commodities-oriented stocks have been big winners, and so they come down real hard when the market pulls back. When you look at the fundamentals in the commodities, in oil and steel and copper, I think that the uptrend is in place, because the developing countries are building infrastructure, and they need more of these raw materials than we can get out of the ground and deliver to the marketplace on a timely basis. So that's putting upward pressure on all these industrial raw materials, as well as the price of oil and gas.
Okay, Ken, always great to have you with us.